I'm Charlotte McLeod with investingnews.com, and here today with me is Lobo Tiggre, CEO of independentspeculator.com. Thank you so much for joining me. Great to have you here.
Always happy to be with you and our dear INN audience.
Very happy to be speaking with you here in person, once again at BRIC this time. And we're going to follow up on our previous conversation back in New Orleans. We covered gold and we covered uranium. Going to get into both of those, but I wanted to start with uranium first because I think that's where a lot of excitement is, and we probably need to get your no hype thoughts on what's going on. So,
are the charts going like this? There couldn't be any hype, could there?
Yeah. So we're going to go into, I think, a lot of things that are going on in the market, but where I was going to start is where I'm seeing a lot of headlines, and that's around what's going on with Kazatomprom. So I will say this very carefully because they haven't really told us much yet, but they put out that press release saying 2024, 2025, they don't know yet, but maybe they missed their production targets. So yeah, starting there and what you make of that and how important that is.
Yeah, well, let's frame this, because the last time you and I spoke, I said that in 2022, my highest conviction trade for 2023 was uranium. And in 2023, when we spoke in New Orleans, my highest conviction trade for this year, 2024, was gold, because uranium's already gone up, all these things. And this Kazatomprom thing is since then. And I'm not saying, okay, it's a game changer, everything is different, great, turn around, go in a different direction. But I think it is very material. I don't want to get too arm-wavy here, but it's important. You take the world's largest and lowest cost producer, and you turn it into a potential buyer on the spot market. That's big. So that's the equivalent of me jumping up and down, by the way. But coming from me, that was like pounding the table. No, it's quite meaningful. Now, this hasn't entirely changed my marching orders because, spot prices has responded. We're up at triple digits, $106 a pound, well above the incentive price. And it's not like Kazatomprom said, we're not going to be able to produce more. It's just we might not be able to produce as much more as we hoped. It was a very different thing, certainly not less. But the reasons for it, this is important. They can't get enough sulfuric acid. Now, most ISR miners, they don't even use acid. We won't get too technical on that. But, they use acid to get more of the uranium out of the rock. And because of the types of rock they have, I'm not too technical, Justin could probably explain this better than me, but they have to have the acid, and they're having trouble getting it. This at least raises a question about how much production they're going to have. And to me, the more telling, they said, their ramp-up plans were challenged, right? And their guidance was at risk. Okay. But the thing that really caught my attention was like, but don't worry, we are going to meet all our contractual obligations regardless. Well, what do you mean by that? That's why I said potentially you take the world's largest and lowest cost producer, make it a buyer. If they felt it necessary to say, now this is supposition, right? They didn't say we're rushing, we're going to go out and buy in the spot market. But the implication of that statement was, don't worry, we'll do what it takes to meet our contractual obligations. To me implies we might have to buy in the spot market, and perhaps even probably will, or else we wouldn't have said it. That's a probable statement. But this is a big deal. And where does that leave us? It leaves me more near-term optimistic on uranium than I would have been for this year. I was concerned about high prices curing high prices. We have the low-cost producers and projects in development coming online now. As you and I speak, there are new uranium mines hitting first production now. Right? And then we have the secondary supply we talked about before, these funds and things that bought low to sell high. We don't know how much they're going to sell. All of that makes 2024 something of a question mark. But then you throw this new question mark on the supply side. It's more interesting to me. And there's potential here. This is not a promise. It's not a forecast. There's potential here that if the situation in Kazakhstan turns out to be worse than they're saying, at the same time, you've got the green agenda and climate change panic kicking in. This could become a flavor of the day that goes nuts. Like, not sustainably high, but just it becomes a flavor of the day and it goes nuts. This could happen this year, this summer. We could be looking at much higher prices. Could, not a promise. On the other hand, we don't know about the secondary supply. So I see it. What I don't see is uranium going way down. Like if it corrects, and by the way, if it does, fantastic buying opportunity, I would take it with both hands because I'm that optimistic about where uranium goes next. But if it does correct, it's not going backwards. It's not going to $18 a pound. It's not going to 50. I don't think. The long-term contracts being signed won't allow that. So I see a lot of downside protection. I see a floor under this market. I see the worst likely case scenario is some modest correction and then ramping up again, and the potential for a hockey stick in the underlying commodity, which should do great for the stock. So I wouldn't want to be short. I'm happy to be very long in the space already, but I wouldn't chase the stocks.
Okay, I think that's a good starting point. Now we have a number of places we can go. I know you said we shouldn't get too technical, but I do want to ask just one question about the sulfuric acid. So I think as the uranium market continues moving along, these things keep popping up, and I think it just shows me how much I still don't know. So I saw that, and I thought, well, is that going to be a problem for other producers? I know not everyone has the same type of mine, but is that something we now have to...
Well, two things. One is generally no. Like most people don't acidify this. I mean, okay, copper in situ miners would, but most uranium in situ mines don't acidify their solutions. So generally no. The other thing is it's the supply constraints. It's not just COVID or global or whatever. It's political. It's Kazakhstan being near Russia and the routes going through. It's a geopolitical issue for them largely. And you're not going to have that problem in Australia or Canada.
Okay, that helps me make sense of that. Then the other thing I was thinking about, with the Kazatomprom news was, okay, so we have all these other companies that are bringing assets back online or they're increasing their production. What does this tell us about, we said they're not going to hit the same stumbling block, but other obstacles that might come in their way as they start to come online?
Well, this is actually a broad lesson for the entire industry. Like, if I can go sideways for just a moment, but to answer this question, there are headlines recently talking about how, there was supposed to be a copper surplus this year, 2024. And suddenly that's in question because this mine's having problems. This one got shut down. This has environmental issues. This one has operational issues. It's underperforming. Chile is having problems. And so all these rosy forecasts on the supply side, suddenly they're, you know what? Mining, to quote my friend Doug Casey, is a crappy 19th century choo-choo train industry. Like things go wrong all the time. And you look at these fancy-pantsy supply deficit projections by these big global engineering firms, and they assume that, the company says they're going to increase production by X amount this year, that they assume that's going to happen. Or companies say that we're going to build this mine, here's our budget, and this is when it'll be done. That's what the feasibility study says. Mines are almost never done on budget and on schedule. You really congratulate management. You send them a bottle of Dom Perignon if they come anywhere close to delivering on time and on budget. The expectation is that they'll miss one or the other or both. So, that's what's normal. And I understand why the firms making these forecasts, they have to go with the study. What else are they going to do? Just guess? Right? They could just make up numbers. So they just go with the studies as a base case. But the point is that Math 101, Statistics 101, the bell curve, right? The highest value in the middle of the bell curve is the single most likely answer to be true. But how often does the actual answer turn out to be that one? Never. Almost, there's all those other numbers on the bell curve. So the studies like that one answer that's the closest to being right as best you can, but it's almost never actually right. So back to uranium. We have all these, things never go according to plan. And as bad as this is, and this 19th century choo-choo train industry is as a whole, it's worse in uranium because, radiation is so scary. Any permitting issues that you have in general are always going to be worse because people panic. There's so much more, if not in my backyard thinking, holds mining back and slows it down in general, it's 10 times worse in uranium just because of the irrational fears in this space. So yeah, I always take it with a grain of salt or err on the side or lean on the side of assuming that supply forecasts are always rosy. So, yeah, I'm not sure where else you wanted to go with that question. But one more thing, if you don't mind my saying so, in the free uranium report on our website, we said, and this was a new finding for us that you and I have spoken about before. Our new finding was, I had thought before that the low-hanging fruit, the supply that was ready to come back online once we got the right uranium price, would be enough to meet the market short term. In the longer term, we'd be looking at deficits, but in the near term, hitting the incentive price would cause high prices to cure high prices. Our new finding in 2023 was, actually, no, that's not enough. Like, even if Kazatomprom was able to reach nameplate capacity and Cameco could get McArthur River and Cigar Lake fully up to name, even if all that happened and these developers built their projects on time and on budget, even if all that happened, it still wouldn't be enough. This was our new finding. So the difference, though, is now we have the secondary supply, and that's a question mark. But now we have, I think I've lost track of your question, but now we have the Kazatomprom has become more of a question mark again. So story short, I'm more bullish on uranium this year than I was when we last spoke. But the chart just went like that. Don't mortgage the house or sell any of your kids to buy uranium stocks. Have a little sense of proportion. Buy the dips.
Okay, and just because you mentioned secondary supply again and the question marks surrounding that, can you go into what you mean there, just so I make sure I understand?
Short version is that you had, Sput came along, hoovered up all these pounds, and all these people are, oh, that's a great idea. Mm-hmm. Right? If you're a uranium bull and you can buy it for $18 a pound or $30 a pound, and you think it's going to the incentive price at least, it's a buy. So we had, except for Sput, you had all kinds of institutions and even mining companies buy uranium physical with the intention of selling it, not the intention of holding it forever. It's an important difference. So if you bought at $30 a pound or even 50, which is not so long ago, with the intention of selling it at higher prices, now you're on a double. And let's say you're one of these mining companies that did this. You did this to have money to build your own mine. Now you're at the incentive level. You want to build your mine, and you're sitting on a double on your uranium. How are you going to not sell that? Now, so I'm not saying therefore uranium has to crash or anything like that. I'm just saying this hasn't happened before. We've never seen this before. I know some of my fellow uranium bulls say, oh, it's not to worry. They're not going to sell all at once. The price will be fine. But we've never been here before. We don't know what's going to happen.
That's
it's a question. I'm not a bear. I'm not saying it's going down. I'm saying it's a question mark. Don't sell your kids into slavery to buy uranium stocks. Have some sense of proportion.
I sincerely hope that nobody does that. Fingers crossed. Okay, so another aspect of uranium that we should probably go over is this pending possible ban on the Russian imports and then the reciprocal possible Russia ban. So I know that a lot of people are looking at that U.S. action as something that is probably most likely going to happen. We just don't know exactly when. Is that how you see it? Do you see it as a pretty certain thing, or are you less sure?
Yeah, it takes, I don't know. Honest answer is I don't know. Okay. If it does happen, I could see the House. Maybe, it's kind of funny that Biden, of all people, is somewhat pro-nuclear now. And, he's pushing for advanced nuclear and so on, because his constituency a few years ago had been horrified and aghast, but now it's become nuclear power is green in a larger faction or fraction of that population. So it's an interesting time. We'll see, and people get it. You got to have, if you don't want to go burning coal, you're going to need that uranium. So I really don't know what will happen. If it happens, maybe Justin could explain better how this would work through the market. Really, he's the uranium insider. I speculate on many things, and I happen to be a uranium bull right now. Long story short, it's probably going to be bullish. How it plays out, what the details are, I don't know. But even just the headline like that, it's probably going to move spot. That's just psychology.
Okay. I think now we should probably talk about, so in one of your recent newsletters, you said, all right, so now this Kazatomprom news has put uranium stocks, or at least the good ones back on your shopping list. So maybe we can talk a little bit about what you're doing now and how investors can possibly play this scenario so that they don't get hurt.
Right. Okay. So, on average, the uranium stocks are still below their 2021 peaks, and a lot of people are upset because, uranium's up and uranium stocks aren't. I think it's actually a mistake to look at the average, though. The better uranium stocks, however you want to define that, they have gone up. There are many of the companies that have, mothball production that can be brought online, or robust feasibility studies that are building, these stocks, many of them are trading at near or at 52-week highs or multi-year highs. So it's just not true that the stocks have gone nowhere. If your uranium stock has gone nowhere, you need to ask yourself some questions, look in the mirror about your stock selection here, because the price has proved highly material to the companies that can actually deliver value to the market, like now and in the near term. So I'm sorry, I just get hung up on this because people get all upset about the stocks haven't moved. What I would do, and maybe two answers. I am long. I'm massively long. Yes, I've taken some profits, but I'm still massively long, so I don't have to do anything, right? I can just, I can go. So what I'm personally looking to do is this market has been, in this whole bull cycle, has been, as you and I have spoken of, 2 steps forward, 1 step back, 2 steps forward, 1 step back. So personally, I would look for the next step back. I mean, the chart's just gone like this, right? Nothing goes vertical forever. So I would look for the next step back. I am looking for the next step back for anything that I missed, or anything that I just like so much I'm willing to put more money at play in. I have one uranium stock right now that I see as a buy, as is. Everything else, it's gone up with uranium, so I'm more patient. If I had no uranium at all, then I would look for something that still has a compelling value proposition. I would want at least one stock, because you never know. It could be tomorrow, they pass that bill, right? Yeah. Or whatever. Something could happen tomorrow. So I would actually, if I had no uranium at all, I would look to, in the next few days, to buy something. But don't chase anything at a 52-week high. Look for something that still has a compelling value proposition. And sorry, one more thing, dear audience. If you say, oh, look at that one, that hasn't moved at all, it's on sale, don't buy that one either. If there's a stock out there that hasn't moved and the uranium price has gone like this and this stock, the share price isn't moving at all, that's a red flag. There's something wrong with that story. Maybe not. But if it's not responding to higher uranium prices, why would you buy that stock? Because uranium prices are moving. It's already shown that it's not moving with uranium. So if I had none, I would look for something that has started to move. It's just not as high flying as some of the others. And sorry, I don't give free stock tips. It's like you say on the internet, if the service is for free, you are the product, and I'm not going to do that to you. But that's what I would look for.
Okay, so I wondered if maybe we can look at the rest of your shopping list. Of course, not naming names, but we've got uranium on there. I know that gold stocks are on there. And so I guess one thing, so you said if you have a uranium stock and it hasn't moved, you need to take a look and figure out what you've done wrong. Does the same apply to gold stocks,
if you've done something wrong.
Yeah.
Let's be nice.
Well, okay, I don't mean to be.
That's my job. I'm the brain on the parade.
I'm supposed to be the nice person. But for gold stocks, is it the same story? Because I know a lot of people here, this seems to be the question of the conference that I'm hearing a lot, is when will my gold stocks move?
Well, and we touched on this last time we spoke. I do see it as an opportunity that the gold stocks as a class are, gold's gone like this and the gold stocks have gone like that. Or actually, gold's gone sideways in the last 3 years. If we take it to 4 years or 5 years, gold's gone up. But if we look at the last 3 years, it's sideways and the stocks haven't done anything. I do see that as an opportunity. I do think gold's going to go higher. I don't think gold's going to come down to meet the stocks. I think the stocks are going to come screeching back up to meet gold. And so the fact that the stocks are on sale is a good thing. But this same issue, though, if I'm as a buyer, I'm looking for a gold stock that is responding. Like if gold's gone up and the stock hasn't moved, that's a red flag, even in the space. But if it's gone up, but just nowhere near as much as gold, then it shows, A, it is responding to higher gold prices, but it's still a deal. That's what I'm looking for.
Okay, I think that's very actionable if people can figure out how to implement that. So the rest of the shopping list. So we knew already gold and uranium. Anything else that you can share there?
I'm still in the expectation that we will get this hard landing. I'm still seeing that the worst of the global recession, I think we are in a global recession. I think the U.S. will not be spared. And I think the worst is still ahead of us. So that means no oil, no copper, no lithium, no industrial minerals at all until, and I don't think anybody can time the market. I'm not saying I'm the guru who will know when the bottom is in. Nobody knows. But right now, the preponderance of evidence tells me that the bottom is likely in front, not behind us. And when I can feel confident that that has flipped, not for sure, not that I'll know where the bottom is, but it's probably behind us, that's when I'll look to buy these things that are necessary. The demand's going to be there for years, if not decades. I'm extremely bullish on oil, as unpopular as it is, because it's obvious it's going to take far longer to wean the world from oil than the powers that be want. But the industry is already starved for capital. That's a perfect setup for higher oil prices after the recession. And I like copper on that basis. I like lithium too, but I want to watch it. And I'm, yeah, other things we'll see. We'll have to see. But the good news here is that in a situation like this, where you're looking at a recession bottom and going up, this is not typically a V-shaped situation, where suddenly everything takes off. Usually you carve out a bottom in a situation like this. And that means there'll be time. When it starts to look like, hey, we need to add some of these industrial minerals to our shopping list, there will be time to build positions. It's not like a day late is way too late. We will have months, I think. And then we will have years to profit. So don't rush.
Okay. I just wanted to make sure we're not missing any other now things, but I think
no, right now, no. No, not right now. Now, if I'm dead wrong, if team no landing, forget soft landing, team no landing is right, everything's fine, hunky-dory, strong laborers, strong spending. Look at that look at that great increase in retail spending in December. Never mind that we charged it all on credit cards and buy now, pay later, right? Let's say Lobo's dead wrong and the market goes up this year. If you believe that, if you can convince yourself that this time is different and all those leading indicators are all wrong, then yeah, you would make your own call. And if I believed that, I'd be buying oil now. I'd be buying copper now. Lithium, not so much. I would want to see the EV makers coming back and start ordering again. But that's not what I believe. I think we're still yet to go through the ringer.
Okay. Yeah. So team hard landing still here. And I remember, your thesis for the Fed this year, I'm going to check my notes to make sure I hopefully get it right. So you were saying it won't cut because it's winning. It'll cut because something's broken. And now we seem, I know nothing is set in stone yet, but we seem like we're set to come down of the Fed's own accord. So what is going on there? Does the Fed know something?
Yeah. No. So
No.
No, they know nothing. They're like Sergeant Schultz. I know nothing. I see nothing. No. So there is my thesis was that the Fed would break something else.
Right. Okay.
Right. And we haven't seen that in a big way yet. So if that doesn't happen before they get to the point where they start loosening anyway, because it's this through the looking glass economy. But if reported inflation keeps coming down and the Fed keeps its rates high, then the real rates are actually increasing. The real rates are the difference between the Fed's rate and the CPI. So if the CPI keeps coming down and the Fed rate is flat, that difference keeps getting bigger, i.e. real rates are getting higher. So the policy is actually tightening, right? It's getting tighter if they do nothing. So if I'm wrong, nothing else breaks, and just the situation continues as it is, then yes, the Fed would start cutting even without, something breaking or whatever. They'll do it just because if inflation continues to go down, and I know that some of my fellow gold bugs are saying, oh, it's going to go back up again. And it might, but it might not. Housing is coming down. That's huge. Energy prices are coming down. That's huge. Base effects are not as big as they were last year, but they're still actually helping the numbers to come in lower. So CPI, official inflation, whatever you experience in the store, my friends, the official numbers could still come down, and the Fed would cut. And if they cut, it would actually be keeping rates level, right? If the CPI is going down and the rate tracks it, they would actually be keeping rates the same in their twisted worldview. So that can happen, by the summer, probably, even if I'm wrong about something else breaking. I still think something's going to break. But even if not, then that happens. So it'll be interesting. And by the way, that's typically bullish for gold. And this time we're not going into a situation like that at, $1,000 gold or even $1,500. We're going into a situation like that at $2,000 gold. So that's a really interesting setup.
Do you care to make, I know you don't like to do price predictions. do you care? But you did tell us an all-time high was coming, which we did have.
Yes.
Do you care to make a gold price?
That's right. We spoke in November. So we got an all-time high last year before the end of the year. So I was right. But I got to say, I was right for the wrong reason. Does that really count as a success? I can't pat myself on the back. Okay, we got a nominal all-time high in gold, but I said it was going to be because the Fed broke something, and the Fed, didn't really.
Maybe half points.
Right. So no, I don't want to pretend to be more of a, I don't like the prediction racket. Right. So, but to answer your question, we're going into a situation that looks very bullish for gold, either because they're right about the recession and recessions are very bullish for gold, or because the Fed is cutting rates and higher rates are supposed to be bad for gold and lower rates are supposed to be good for gold. So that's kind of a win-win for gold. You go into that at a $2,000 plus or minus gold price. I'm not going to give you a price forecast, but I'll say a mere 10% increase. Like gold was up, 10, 15% in 2023? You do that again in 2024, just 10 to 15%. You're looking at $2,200 to $2,300 gold. And that is so far above the last nominal high, it would be making headlines left and right. You look at a 20 or 25% increase, and it'd be one of those things that would break the internet, right? It would become a meme.
I would be interested to see gold become a meme. Okay, very interesting. We'll keep the range in mind, but we won't hold you to that prediction there. I think we've gone through what I wanted to touch on with you in terms of uranium, in terms of gold, but I will put it back to you if you had any final thoughts that you wanted to leave people with for 2024.
Well, maybe not thought for 2024, but...
Or beyond.
Well, actually, the thought for right now. My mantra, right?
Right now.
Right, yes. It's forget about inevitable, not even tell me about imminent. I want to know what's happening right now. And something happening right now. This is the INN scoop. I haven't talked to anybody else really about this on air. The show here, often we have these talks and you'll start with, how's the show and so on.
I didn't ask you this time.
No,
sorry.
But I think that's material. Like it's not chit chat. Who cares how the show's doing? Sorry, Jay. But this time, I think it does matter. This show is like twice as busy as it was last year. They filled the whole floor. The aisles are packed. The companies are just jamming. They're talking to people. The energy here. Energy. What a mushy metric. How can I measure that? I can't. But I'm just, what it's worth. My wolf whiskers sense here. It's like my spidey sense. Is like, wow, this is happening now. These people are here, they're shopping, they're asking questions. People are here to buy stocks. I can give you another data point. This may sound self-congratulatory. I don't mean this in that way, but it's just a data point. My business has really taken off the last couple of weeks. And my business, I'm a newsletter writer, and it's sentiment. Like, really, I should sell more newsletters when nobody wants to hear about gold or mining stocks or whatever. Buy low, sell high, right? Blood in the streets, when everybody hates it, that's when people should buy. But no, people buy when they get excited and things are moving. So for what it's worth, you add those together in terms of things that are literally happening right now. If we use my sales as a barometer and we use this show as a barometer, it feels like a pivot point. It feels like an inflection point. Something has happened. This wasn't happening when you and I last spoke, which is just a few months ago. And that's interesting because if the stocks are on sale because of sentiment, and sentiment is changing, I'll let you do the math.
Okay, very, very mic drop moment there. That's a good place to wrap it up. Thank you very much. Really good to talk to you. Once again, I'm Charlotte McLeod with investingnews.com, and this is Lobo Tiggre. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.